Shares of Coinbase fell 14.2% this week after the company released earnings. Now, results weren't all that good, and it seems like the market may have really gotten ahead of itself with what they expected from Coinbase. The company's growth is steady in all the right places, but it's not exceptional yet. And I think we're kind of putting the cart before the horse in a number of different ways. And then when you have down trading volume, which is actually where Coinbase makes most of its money, it can make results actually look really disappointing really quickly. But let's dig into the numbers and show where there's some good news and where there's maybe a little bit of disappointment, because I look at Coinbase as a company that can fundamentally change the way that we interact with financial instruments in a digital world over the next 10 to 20 years. I'm not really concerned about the next quarter or the next month. So that framing is really important. If you're looking for a day trade, this is not going to be the analysis for you. But if you're looking for stocks that can 10x over the next 10 years, that's what I'm looking for on asymmetric investing. So let's dig into this. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I'm going to start with the chart just to show the market's reaction. And the bad news came on Thursday. And that's where you see this drop here. Basically, all of the drop, actually even a little bit more than it, because shares were up a little bit heading into earnings for the week. So obviously the decline happened right after the report came out, which was after the market closed on Wednesday. But let's zoom out a little bit, because this is always important. 6 months, stock is down a little bit. Year to date, actually up a little bit. Now let's go back a year. Shares are up 135%. So things are getting better for Coinbase, but also a lot of improvement is priced into the stock. That's why you see things kind of bouncing around here a little bit. The market is basically waiting for Coinbase to catch up to its valuation. So let's dig into those numbers. At a really, really high level, this is the numbers that you want to know. $1.2 billion in revenue for the quarter. Net income was $75 million. This continued a streak of profitability on the bottom line. So not adjusted EBITDA, not just saying free cash flow, actual net income. So that's a really good sign for the company. Subscription and services revenue. I'll dig into this a little bit more, but this is where I think we really need to put our focus with Coinbase. $556 million in adjusted EBITDA, $449 million. This was the other big piece of news, was that there was a share repurchase authorization of $1 billion. Coinbase has a ton of cash on its balance sheet. So what are you going to do with that cash? One of the things that management is saying that they're going to do is start to buy back shares. So we'll see when that happens. This is actually one of those points where if the stock drops and you're a long-term investor, you actually want management to be buying back shares at a lower price than they're at today. It seems a little bit counterintuitive, but that at least allows Coinbase's management to be aggressive and buy back that stock if the market sends shares lower. So let's get to some of the more important results. Here you can see the streak of net income and adjusted EBITDA now being positive for 4 straight quarters, both of those numbers. And results versus outlook, this is the outlook that they gave in August of 2024. They expected $430 to $600 million in revenue from subscription and services. That was 556. So right in the midpoint there, not a huge beat, not a huge miss. Mid-teens is a percentage revenue of transaction expenses. That was 15%. Technology and development, general administrative, $700 to $750 million. It came in a little bit on the low end of that, and that includes $230 million in stock-based compensation. And then sales and marketing, they were at the real low end of this. This is one of the reasons the company was still profitable. They're really holding those operating expenses in line right now. That was $165 million. But where's revenue coming from? The main revenue source for Coinbase to this day is still customer transactions, $483.3 million in revenue. Institutions are doing much more trading on Coinbase today, but they're not a very high margin segment. So that was only $55.3 million, and then other revenue, $34 million. So $72.5 million in revenue from transactions. That's down almost 50% from the first quarter. Most of that drop is just a result of less activity in the crypto market in general. So this is one of those points where volatility is actually good for Coinbase's business on the trading side. Subscription and services, I've talked about this a lot on this channel. This is where I think you actually should be focusing, because this is where there's actual disruption happening. This is where there's innovation going on. Subscription and services revenue continues to climb. It was down a little bit quarter over quarter, but look at these year over year numbers, $556.1 million in revenue. That's up from 334.4 a year ago. Stablecoin revenue up sharply. That's because of their ownership stake, or the revenue that they get from the USDC token. Blockchain rewards. This is where things like the Base blockchain generates revenue, $154.8 million in revenue. Financing fees. This is actually held pretty steady. Then you have custodial fees. Gets a lot of attention, but it's not actually all that big of a number. This is the main custodian for most of the ETFs out there, but just $31.7 million in revenue, and then other 58.7. So I'll put some charts up here in just a second, but this is where there continues to be steady growth. There's going to be volatility quarter to quarter, but there is steady growth in subscription and services, and that's where you want to see more revenue for Coinbase. As things like stablecoin transactions become more normal, you're going to have more stablecoin revenue. You're going to have more blockchain reward revenue. You're going to have more subscriptions, things like wallets as a service. There's all kinds of ways that Coinbase can make money if stablecoins become more of a transaction medium. I've done a couple of videos on that in the past. I can link to those in the show notes, but that's where I think we need to be really bullish about Coinbase and crypto in general. I'm not really concerned about Bitcoin or Ethereum or these other tokens going up and down. I'm concerned about the innovation that's happening on the blockchain, and that's this segment right here. Cash that's on the balance sheet. I'll get to the balance sheet overall in just a second, but $8.2 billion worth of cash, 508 million in USDC, 6.1 million in money market, government bonds, low risk debt, corporate cash, 1.5 billion. So a lot of cash on the balance sheet for Coinbase. And the amount of resources is increasing, 7.8 billion in cash just 3 months ago. Now that's up to 8.2. So that's primarily because of operating cash that was generated from the business. And then there's a couple items. One main one is $135 million in prime financing, but nothing really to be concerned about in this cash walk here. Outlook, again, this is where you could be disappointed with the results, expecting subscription and services revenue to be $505 to $580 million. So probably expecting things to pull back a little bit at the midpoint here. Transaction expenses expecting to be about the same. And then similar operating expenses that you see here. Transaction revenue from October was approximately $190 million. So that's in line kind of at the high end of what we saw in the third quarter, but that's going to be volatile. I do want to highlight on the balance sheet, we talked about the $8.2 billion worth of cash, but there's also $4.2 billion worth of debt that is held on the balance sheet. So there's about $4 billion worth of cash. Today, there's a market cap for Coinbase of about $45 billion. So somewhere around 10% of the company's market cap is held in cash. That's a pretty good position. And that gives you an idea of what they would be able to buy back if they were able to buy back shares. Now, again, if the stock falls, the market cap goes to $30 billion, let's say, that's a much more attractive point to be buying back stock. You could buy about 3 percentage points of shares outstanding at that price. Right now, going to be only a couple of percentage points. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So why are shares down after results came out? There wasn't really much to get excited about in the results, frankly. And a lot of the developments that's happening with the blockchain, with cryptocurrency, with stablecoins is really things that are in early phases of potential growth. But if those things stick, if Stripe is able to move into stablecoins a little bit more, PayPal, all of these payment companies are starting to acquire companies in the stablecoin infrastructure, launch their own stablecoins. They're going to need tools that Coinbase has in some instances. Maybe they're even going to use the Base blockchain. All of those things are good for Coinbase no matter what happens. This is a little bit like Amazon being a leading retail company when everybody was building their own stores. I think from an investment perspective, just buy the leader, and this is the biggest publicly traded company in the crypto industry on the blockchain. So that's why I think you just generally need to be bullish on Coinbase, because things like stablecoins and the blockchain are going to be very disruptive to our digital future, whether that's moving financial transactions there, whether real assets end up being denominated on the blockchain. There's real value, there's real efficiency that comes from these tools that Coinbase is building. Long term, that's going to manifest in higher subscription and other product growth. I don't think necessarily trading is the future for this company. It's going to be a piece of the picture, but it's not going to be the revenue and profit driver that we've seen in the past. The future is really building this infrastructure for the blockchain in the future. Management talked a lot about that, improving utility on the blockchain. We're seeing signs, but again, don't be surprised if shares fall over the next year or two if we don't see some of these things pick up. But 5 years, 10 years, 20 years from now, I can't imagine a world where we're not making much more stablecoin transactions than we are today. And so I want to ride that growth. That's what I have in mind when looking at these results. Nothing to be super surprised about, either positive or negative. Coinbase is in a really good position. They've got a great balance sheet. They're now saying they're going to buy back stock if they need to. I continue to be bullish, but maybe not a great time to be buying shares because they may continue to slip over the next few months. But let me know what you think about the results from Coinbase. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.